Okay, so let's unpack this. If you've been watching the markets recently, especially anything in retail or apparel, you've probably seen the headlines about Lululemon, ticker LULU.
Yeah, definitely some movement there.
The stock has seen some, well, noticeable volatility lately, particularly after their latest earnings report came out.
Right.
And that's exactly where we're diving today. We've got this comprehensive stack of sources right here. Includes everything from recent financials, the detailed Q1 earnings report itself, various news headlines that popped up, analyst commentary, even historical financials.
Okay, so our mission here really is to dive straight into these
They right
documents.
to the source.
Yeah, exactly. We want to pull out the most important facts, the figures, the insights, and kind of move beyond those initial, sometimes, dramatic headlines.
hmm
What do these sources actually tell us about what's driving the feeling around Lululemon right now? What do they show about performance, challenges, future prospects?
Exactly. It's about cutting through that noise, focusing on the concrete info from the company and how the market experts are seeing it, all based on the materials you shared. So let's jump right in. What picture do these sources paint?
Okay, let's start with a quick snapshot. Lululemon Athletica Inc., according to your sources,
Hmm.
core business. Designing, distributing, retailing, athletic apparel, accessories.
Yeah.
Primarily women's and men's apparel, though they've expanded.
Right, the clothing mostly.
Yeah, and the business structure. Two main parts. Company-operated stores, the physical shops, and direct-to-consumer, which is largely their big e-commerce operation. Industry-wise, they're firmly in apparel retail.
Okay. And the stock info you provided, the price was hovering around $258.50 recently, down a bit on the day this data snapshot was taken. But it's worth noting one analyst source in here has a fair value, or they call it our price target, quite a bit higher, like $285.83.
Interesting gap.
Yeah, that difference itself kind of tells you there's a split in perception right away, just based on the data points.
Right. Now, the catalyst for all the recent buzz was definitely the Q1 fiscal 2025 earnings report that came out June 5th, 2025. And, on the surface, some key numbers look pretty positive.
Okay.
Total revenue hit $2.4 billion. Now, that's up 7% year over year. And if you take out currency swings, the constant currency number revenue was actually up 8%.
Which hit their guidance, right?
Exactly, the high end of their own guidance range. That's pretty crucial.
And profitability. What did the report show there? The sources mentioned gross margin.
Yeah, good news there. Gross margin actually expanded 60 basis points.
Which is what, 0.6% improvement?
That's it, 0.6% better gross margin relative to revenue. And the
Mhm.
report says this was down to things like lower product costs, managing markdowns better, and using less expensive air freight than they did the year before.
Okay, that makes sense. But you said operating margin.
Yeah, digging a bit deeper, the operating margin did dip slightly.
Yeah.
But the bottom line, the diluted earnings per share, EPS, came in strong at $2.60. That was actually ahead of what analysts were expecting.
So a beat on EPS, revenue at the high end. What's the catch?
Well, what's really revealing in the sources is where that growth came from geographically.
Yeah.
There's a pretty clear split.
Ah, okay.
International markets were a huge bright spot. Revenue there just surged up 19%, or 20% if you look at constant currency.
Wow, 20%.
Yeah, and powerfully led by China mainland, which saw a 21% jump. The rest of world segment was strong too, up 16%.
And management's view on that, the sources seem to frame international as a big opportunity.
Absolutely. They see Lululemon as still like an underdeveloped global brand,
Yeah.
huge runway for future expansion there. It's clearly a core part of their long-term strategy. They're aiming for eventually a 50-50 split between international and domestic revenue.
Which is a massive jump from where they are now, right? Wasn't it around 25% international last year?
Exactly. It's a big ambition. And that international engine is so important, especially when you contrast it with the Americas region.
Right, how did that look?
Much more modest growth, just up 3% or 4% constant currency. Within that, Canada did okay, up 9%, but the U.S. market, only 2% growth.
Only 2%. That U.S. number really jumps out. And management mentioned cautious consumers.
They did explicitly in the sources, saying U.S. consumers are, well, remaining cautious, making more intentional buys. And that definitely hit store traffic.
Okay, so slower traffic. You'd think that would hurt sales badly.
You might think so. But here's where the sources reveal something really interesting. Despite that dip in foot traffic, conversion rates, the percentage of people walking in who actually buy something held up, and the average amount people spent per transaction also held up.
Huh. So fewer people walking in, but those who do are still buying and spending about the same amount.
Pretty much. And maybe even more surprising, the sources note that Lululemon actually gained market share in the U.S. premium athletic wear space in Q1.
Gain share, even with only 2% growth overall.
Yeah, across both men's and women's categories. Which is pretty significant, right? Gaining share when the overall consumer is cautious. It suggests their core strengths are really connecting with their target customer, even when things are tough macro-wise.
That really speaks volumes about those core strengths the sources keep mentioning, like their narrow economic moat rating.
Yeah.
Basically, how strong their competitive edge is.
Exactly. And that moat, it's based on their brand equity, which is strong, the reputation for constant product innovation, and that deep community connection they build.
These aren't just like marketing buzzwords either. The sources emphasize these let Lululemon charge premium prices and keep customers incredibly loyal.
Yeah, this is the foundation of the bull case you see in some of the analyst notes. Product-wise, the report mentioned positive reactions to new styles like Daydrift, the no-line leggings. They're using R&D from things like that. Further ultramarathon event to test new ideas for future products.
Right, keeping the innovation pipeline full.
Which is seen as crucial, keeps the brand fresh.
And the brand building continues too, marketing campaigns, those community events like the roller rink thing or that big yoga event in China, the membership program.
All contributing, according to the sources, to building brand awareness. Unaided awareness in the U.S. was apparently up to 40% in Q1.
Okay, so you've got strong international growth, holding pricing, innovating, gaining share in a tough U.S. market. Sounds pretty good.
Right. But as that big stock drop after earnings showed, the sources also point to some pretty substantial headwinds, things that are hitting the near-term outlook and definitely spooked investors.
Okay, let's unpack those headwinds then. The major one highlighted seems to be tariffs.
Yeah, that seems to be the biggest driver of concern right now, the whole evolving tariff situation. The company is actively planning, assuming potential higher rates. Specifically, they're factoring in a possible 30% incremental tariff on goods from China.
30%, wow.
And a 10% incremental tariff from certain other countries they source from.
And this isn't just a maybe, they expect it to hit margins.
Yes, directly impacting margins and hitting particularly hard in Q2 is the expectation laid out.
Okay. Are they doing anything about it? Mitigation?
They are. The sources mention efforts like managing expenses across the board, supply chain tweaks like speeding up their dual sourcing, getting products from multiple countries, not just one.
Smart.
And also planning some modest price increases later in Q2 and into Q3. However, the report also notes these mitigation efforts probably won't fully kick in until the second half of the year.
So Q2 is kind of exposed.
That seems to be the read, yeah. More exposed to that tariff pressure in the near term.
Okay, what else? You mentioned investments.
Right. Pressure on near-term profit from significant investments they're making for future growth. Long-term, probably good, but it costs money now.
Like capital expenditures, buildings, equipment.
Exactly. CapEx is planned between $740 million and $760 million for the whole fiscal year. That money is going into things like bigger distribution centers, new stores, fixing up old ones, tech investments.
Standard growth stuff, but it adds up.
It does. And on the operating expense side too, SG&A, which is selling, general, and admin costs like marketing, salaries, rent, that's expected to see some deleverage. Basically, SG&A costs are likely to grow faster than revenue in the short term.
Why is that?
It's mostly due to those ongoing investments in their big Power of 3x2 growth plan, think marketing, pushing international expansion, tech upgrades, plus some costs like store labor hours returning to more normal levels after maybe being managed really tightly.
So strategic bets on the future, but they weigh on margins right now.
Undeniably, yeah, in the short term.
Another thing the sources point out is inventory levels are up.
Yeah, significantly year over year, up 23% in dollar value, 16% in terms of units.
Why so much?
Well, the company says it's partly higher costs from tariffs and currency exchange, but also they're deliberately investing in having inventory for new product launches.
Okay, but does that carry risk, like having to mark stuff down if it doesn't sell?
It can. And while markdowns were actually down in Q1, the full-year guidance now prudently includes a slight increase in expected markdowns.
So they're building in some caution there.
Seems like it.
Yeah.
Reflecting that consumer uncertainty, especially in the U.S., and just the competitive landscape, higher inventory, especially new stuff, always carries a bit more markdown risk. So they seem to be accounting for that possibility.
And speaking of the U.S., the competitive environment, still tough.
The sources acknowledge ongoing promotions from competitors. Lululemon historically tries to be a full-price business, right? Leaning on the brand and new products, not discounts.
Right.
But they are watching the situation. And if these macro headwinds stick around, the U.S. market could get even more competitive, more promotional.
Okay, so quite a few pressures bubbling up. How does this all translate into their actual forecasts, their guidance, and the financial health overall?
Right, let's look at the guidance from the sources. For Q2, the current quarter, they guided for 7-8% net revenue growth and diluted EPS between $2.85 and $2.90.
Okay, and for the full year?
Full fiscal year 2025, they actually reaffirmed their revenue guidance range, still expecting $11.150 billion to $11.300 billion.
So top line still looks okay in their view.
Yeah, that's about 5-7% growth, or 7-8% if you adjust for an extra week they had last year. So revenue outlook largely intact. But, and this is the kicker, they lowered their adjusted diluted EPS range, now expecting $14.58 to $14.78 for the full year.
Lowered the profit forecast. Why exactly?
And the reasons cited in the sources are precisely those pressures we just talked about, primarily the expected hit from higher net tariffs and those planned for potential markdowns.
So even with solid Q1 revenue, the forward profit view is definitely being squeezed by those specific cost factors coming up.
That's the picture the sources paint.
What about their overall financial strength, though? Balance sheet.
Oh, that still looks very reassuring according to the sources. Lululemon has a really strong balance sheet, about $1.3 billion in cash, and importantly, no debt.
No debt is always nice to see.
Definitely gives them flexibility, right, to make those investments even when things are uncertain.
Yeah.
And they're still buying back shares, too. That's a key part of how they use their cash. Bought back $430 million in stock in Q1, still have about $1.1 billion left on their current buyback program.
Okay, solid foundation. But the market's reaction, the headlines you mentioned were pretty dramatic.
Yes, swift and decidedly negative, as captured in those headlines. The stock took a significant tumble post-earnings. Some headlines talked about plunges like 18%, even over 20%.
Ouch.
And that reaction seems really tied to the fear around those tariffs and that lowered full-year profit forecast, even though Q1 revenue was technically okay.
And the analyst, what did they make of it all? Mixed bag.
Pretty much as you'd expect, yeah. Mixed commentary followed the report. Some analysts were framing the pullback as maybe a buying opportunity, pointing to the long-term stuff, brand strength, international growth, the balance sheet.
Case?
Right. But others cut their forecasts, lowered price targets, focusing more on the near-term issues, the U.S. slowdown, the tariff and investment pressure on margins.
The bear case.
Exactly. And we should stress, we're just reporting the range of views here from the source material, not taking a side. It's just part of the whole picture the market is trying to digest. You saw that average analyst price target cited in one source, around $440.25, way above where the stock was trading. Shows you that split perspective.
So that really sums up the bull versus bear arguments provided in the sources, doesn't it?
I think so. The bulls are leaning on the brand, the big international opportunity, the innovation engine, that solid balance sheet.
While the bears are focused on the U.S. slowdown, the real margin pressure from tariffs and investments, the higher inventory risk, and that potentially tougher competitive scene in the U.S.
So pulling it all together, based on everything in these sources you shared, Lululemon seems to be at this clear point of tension. Well, they're executing on their long-term plan, right?
Yeah.
Especially pushing internationally. And they're using their core strengths brand, innovation, to even gain share in a tough market like the U.S.
Okay, that's the positive execution side.
But at the same time, they're facing these very real material near-term headwinds. Mostly those tariffs and the costs tied to the same long-term investments. And those are expected to squeeze profit margins in the next few quarters, hence the lowered EPS guidance.
So the key takeaway isn't just stock dropped, it's why it dropped, based on what's in the company's report and how analysts reacted?
Exactly. It's understanding the specifics, the timing and size of the tariff impact on near-term margins, the cost of strategic investments hitting the profit line now, and that kind of mixed picture in the U.S. market. Knowing those factors gives you, the listener, a much more nuanced view.
Yeah, it really highlights that even for a powerhouse brand, big macro things like consumer caution, geopolitical stuff like tariffs, they can create significant pressure points even if they might be temporary. So as you, our listener, reflect on all this info, here's maybe a final thought to chew on. Given Lululemon's clear strategy is relying heavily on international growth to offset U.S. headwinds and kind of justify these big investments, how significant is the risk if global macro uncertainty also picks up? Could that potentially impact that really crucial international expansion they're counting on?
That's a good question to ponder.
It is a lot to think about, isn't it? This kind of deep dive, pulling information straight from the company reports, analyst takes, news articles. It really does help cut through the information overload. Gives you a clearer picture of what's actually going on behind those quick headlines.
Awful, yeah.
We really hope this has been incredibly helpful for you. If you found this breakdown valuable, if you want more insights like this to stay informed on the topics that matter to you, well, the absolute best way to support the channel and make sure we can keep bringing you these deep dives is to subscribe.
Please do.
Yeah, hit that subscribe button right now and ring the little bell icon too. That way you get notified instantly every single time a new deep dive drops. It genuinely helps us keep doing this work. Thanks so much for listening.